Okay, welcome back, folks. Kevin Garrett here. Liking, subscribing, supporting the channel. Buy me a cup of coffee if you don't mind. I appreciate it. Now, in the previous video, we talked about projecting price, future price, and that's very important. I mentioned to you, I showed you, I outlined this area here, which is the opening gap, which, by the way, it returns to 50% of that 70% of the time, not all the time. So, in other times, this gap here would be I will use a Fibonacci tool and expect price to come back to the 50% level 70% of the time. But it didn't this time, and that's okay. What we're talking about today is projecting price like a pro. And I'm going to use the same Fibonacci. I'm going to have to reverse it, however. And reverse it. And I'm going to go to this previous swing low to this swing high right there. That's how you project price in the future, by using your Fibonacci tool. However, this particular Fibonacci tool is customized for different levels of deviations, different deviation levels. What do I mean by that? From this zero to that area is one standard deviation. That's 1.5 standard deviations. That's 2 standard deviations. 3, 4, 4.5, 5, 5.5, 6, 7, and 8 standard deviations. You don't need that many, but what you can do is take it to 10, and what that allows you to do and see, in this, we happen to be in a bullish market at this time, it's projecting potential price movements. So far, it's went as high as 6 and an eighth or so standard deviations. That's the highest it went. So I would mark this level here, and I would annotate it, call it external buy-side liquidity. Okay. In other words, that's the high of that session, and I will be monitoring that high of that session, and I'll also mark this level because it's in that price range right now. So right now it's making lower highs. It retraced here. It's probably going to come after this liquidity in this area, or it could go as high as 26.92225 next week. So projecting price is easy to do when you know where to place it. Now I'm going to move this to this swing high, and I'm going to move the bottom of this Fibonacci to this swing low, and guess what it does? It projects future price potential. And these will be the area or targets I will be peeling off, or removing some of my position size. If I'm in 3 contracts, I'll take off 2 contracts and leave a runner. See what price does. In other words, lock in my profit quick and allow the other ones to run, and then I would monitor it. Now, if you suspect that price is going to go down and go after this opening gap, because price typically does return to that area, the question becomes, when does it return? Well, it's going to eventually get there, but you can also project a bearish price projection simply by reversing your Fibonacci tool. I'm going to click reverse. Watch what happens. Boom. Now you have bearish price projections. And we know as a trader, price is eventually going to come and fill this void, because this is a true price void here. Price opened up and moved so fast because all the aftermarket trading, it left some people out. It left some orders unfilled. And you may only see this gap in the regular trading hours toggle down here. For example, I'm going to highlight this area. This is where the gap is, okay? But when I go down to the lower right of my screen, RTH means regular trading hours. I'm going to switch it to extended trading hours. And you won't see this gap, but I'm going to show you when we lock it, when that happened. And it happened at the opening bell, the bottom line, okay? Go to extended trading hours, and guess what? All this area, there was a gap in price. But during the electronic 80 hours, it has showed up. But it didn't show that area during the regular trading hours application. Why is that? Well, I don't completely know, so I'm not going to lie and tell you something I don't understand. But it happens like that often. Let's see what the computer says. What is the difference between regular trading hours and electronic trading hours? Let's see. Let me learn something today. This is what the definition is. Electronic trading hours refers to the near 24/5 electronic overnight and pre-market session, 6 p.m. to 9:30 p.m. Conversely, regular trading hours are primary high-volume liquid market hours, usually from 9:30 to 4 p.m. Eastern Standard Time for stocks and equities and futures. Electronic trading offers 24 access to globe news, while regular trading offers a narrow spread and stable price movements. Key difference: Eastern Standard Time, regular trading hours occur from 9:30 to 4 p.m. Electronic trading hours or overnight covers 6 p.m. to 6:30 a.m. Okay, so that's your answer. And it's right there in front of us all if you want to know. Now, in this series, I'm talking about projecting future price, and then I'm going to talk about different types of Fibonacci's. And I have several different type of Fibonacci's. And why do I have several different types? Because every market's different. If I decide to trade gold, for example, it moves in differently than the NASDAQ does. So I might want to customize my Fibonacci for gold. Even though there's a standard deviation, which is your default, but it still gives you the option to customize it, the colors, the size, the deviations. This, what you're looking at right now, is not a standard default Fibonacci. It's a measuring Fibonacci with standard deviations, other than the 50%, the 618, I have it at 6.2, uh, and at 7.9, which is, close to 80. These three are areas of interest, pullback levels for reentries. optimum trade entries. That's why you see them a different color here. Let me open it up. So if I was bullish and I had this down here on this dealing range, this swing high to swing low, and it pulled back, as you see it does here, it's going up and it pulled back to these different levels, right? Those are points of interest that you might want to add to a position, or you might want to enter a position. That's why these are a different color. If it goes back to the red, which is where the range low is, well, typically that's going to be a reversal. So um, that's why this particular Fibonacci is different. I have another Fibonacci tool. I have it in ACE, and it looks like that. Here are your standard deviations here. And this particular one, I have each one of these measured out. I believe it's 10, 15, 15, 14, 10 handles, because this will be my target profit areas. So I might be looking for 15 points only. And I might be using this in the ranging market. And during using this Fibonacci, I can project price and my targets where I want to exit a trade. And the way I have this one set up, I have it for if it turns on me and go lower, or if it breaks higher and goes higher. So these are certain levels of take profit targets I would want. I wouldn't want to be greedy. But I have a Fibonacci projection tool for different markets. I have one that's a 3-line 50% only. So the yellow line is the 50%. It's actually 4 1/4. But if I didn't have that here, you don't see it like that. So this one you see it differently. 3 lines. I have only an interest in a ranging market, and this one tells me I should place a limit buy order here, anywhere below here if it's a ranging market, and a sell order anywhere in this area. And I can use it for any other items too. I have other Fibonacci's based on what I'm looking for. I have one called Asian Range Fib. Well, that's the one I showed you before. I labeled that Asian range because if I trade during that session, the market in the Asian session typically is a period of time where price doesn't move very much, but it typically bounces around in a range. So I would use this Fibonacci for my entries, take profit targets, if I'm going to trade the Asian range. And it gives me projections. That's what this video is about. Projecting price like a pro. Okay. Well, like I said, I'm going to keep this video short. This is video number 2 of this session. And projecting price like a pro, the next video is going to talk about customizing your Fibonacci. That way you can develop your own Fibonacci and how you develop your trading style and build a Fibonacci around. Build a Fibonacci around the markets that you trade, because every market trades differently. Although they do the same thing, they all go up, down, and sideways, but some of them move more aggressively than others. Gold might spike, for example, very quickly, very high, 150 points, where the Nasdaq might spike in price 75 to 200 points. It depends. Every market's different. If you're trading the Dow, which most people don't, that one doesn't move that quickly. If you're trading the S&P 500, that one doesn't move. That moves differently because there's more stocks in it. But it seems to be a correlated pair to the Nasdaq. Well, that's it for now. Thank you for your time. Please like, subscribe, hit the notification bell for the next part of this series, projecting price like a pro. And video 3 is going to be on customizing your Fibonacci tool. And as you start to focus on one particular market at a time, you'll better understand. You can use the standard deviation, a lot of people do, but you still can customize it based on your personal preference. And we're going to touch on that in the next video. But again, please like, subscribe, hit the notification bell, and I appreciate your time today. Have a good evening, good afternoon, good morning, wherever you are on the planet. Love you, love you, love ya.